I'm really bullish on precious metals long term. I think silver will be up, $150, $200. I think gold will be 8,000 plus. But I do think there's going to be one hell of a roller coaster ride before there.
Welcome to another episode of Top of Mind. I'm Devin Murrigan. CEO Chris Vermeulen from thetechnicaltraders.com is with us today. Chris, it's a pleasure, always. Thanks for your time.
Yeah, thanks for having me, Devin.
Well, look, Chris, you've constantly said you don't place much weight on news flow, right? We've had this conversation before, whether it's geopolitics, interest rates, or macro headlines, and instead you focus on price and trend. But I mean, over the past few weeks, we've seen oil spike on Middle East tensions and then reverse, equities hold near highs, and gold and silver trade in volatile two-way moves rather than acting as safe havens. So when you look at that sequence, is price still leading everything here, or are markets being driven more by macro than usual?
Yeah, I would say price still leads. I mean, price is usually trying to factor in what news is coming around the corner. You buy the rumor, buy the feeling, sell the news type of play. The charts are pretty clear on how they show that. I mean, when we look at the S&P 500, I can share a chart, and you can see how this has navigated. When you look at the markets from a technical standpoint, let's actually jump to the S&P 500. So this is our trend, our strategy that follows price action only. The market went sideways for the last couple of months or previously, and the momentum and the money flow stalled out. Money was telling us something big was about to happen. There's going to be some reset in our strategy just based on technicals. Big money started to flow out of the markets, and then we had the Strait of Hormuz kind of war crack open, and then suddenly we started to see things change direction, and now we've seen the market scream higher. So I always find news typically is delayed. We see a move start to happen, and then the news comes out, and people are like, oh, that's why we've seen the recent weakness or strength, like the insiders or the big money has known it. So I definitely believe price moves first. It's the only way we really make money, and price tends to, if you try to trade the news, you're always going to be caught off guard because you don't know when it's going to happen. You don't know when what direction it's going to be. So it's always going to be a struggle when you trade on news. It's very random.
You've warned the cycle could end in a 50% reset, but you also see a final push higher, Chris. Given the volatility we've seen over the past week, which phase are we actually in right now?
Yeah, it's difficult to gauge. I mean, we're definitely from a broader market. When you look at all the things that have been happening in terms of the precious metals explosive move early this year, we've got the war, we've got oil pricing spiking, we've got energy stocks spiking. There's a lot of things going on telling us that there's big problems coming to an end, or going to put an end to the economy, I think. But we might see one more big push. Now, usually things end up having a very big push near a major market top. We'll see money pile in. And right now, we're seeing a resurgence of AI, money flowing into growth stocks. We're seeing the small cap stock, the micro cap stocks come to life. The ARK ETFs, which are known to hold a lot of the small and aggressive, fast-moving companies, growth stocks, they're bubbling up to the top of our hot list, meaning people are piling in to all of these growth plays. People want to take on risk. They're not afraid. We're seeing dividend stocks underperform. We're seeing utilities underperform. People want to get into the fast-moving stuff. And so this is bullish, but it's also, when you step back, usually a contrarian indicator. So we might still see the S&P 500, the NASDAQ rally another maybe 7-10% or so to the upside. It could be a very strong, powerful move that might actually happen in the next week or two. And that actually could signal a top. I think there could be one last big move into this market. We won't know until we really get a gauge on the money flows and how it moves. We follow price, and that is the big difference, right? Is a lot of people use technicals to try to predict tops and bottoms, but that's not the way you should use them. It's identify when there's a new trend starting, like the uptrend we have now. When the trend is up and the money's pouring in, you got to get on board. You got to ride that train. And when it starts to stall out and rolls over, we're never going to get out of the top. Price will start to sell off and start to move down, and our system will say, hey, The trend's come to an end. Let's step aside. So we're always a little delayed to get in, a little delayed to get out. The key is we try to manage and collect that middle portion of a trend. And so we just have to follow price. And who knows, this market may top sooner than later, or it could take a long time. We really just have to follow it and unfortunately just wait for it to unfold.
Yeah, it's interesting you mentioned those little smaller players because you're seeing a lot of potential in there. Is there still a lot more traction sort of, reserved underneath there with those smaller players? Certainly looks like it, Chris.
Yeah, I mean, there's when you look at the small cap stocks and stuff, I mean, what the chart of the Russell 2000 points to some pretty exciting price action. When we look at the daily chart of this and we look at the potential upside here,
yep.
We've got this Russell 2000 chart pointing to using a Fibonacci extension, which is a very, very powerful tool. There's a high momentum move here that we could see the Russell 2000 have a significant rally up to about 312, which based on this chart pattern, I mean, that is about a 12 to 13% move to the upside. That could happen over the next month. And, that's what the charts are pointing to in terms of where the money is flowing. The only caveat here, the only concern is the move up has been on relatively light volume. And this is one of those late stage things that we need to be aware of that you kind of brought up earlier, is that we have big sector rotation. We have money moving into one sector 1 month and then out of a sector, a month later or even sooner. And so we're not seeing like full broad market strength. We're not seeing every stock rally and participating. We're seeing one pocket of technology here, and then we're seeing defensive stocks, then we're seeing precious metals. So money's just sloshing and rotating around. And so this low volume here makes it a little more nervous that there's not a lot of commitment behind this. And what it seems is low volume favors high pricing. So if there's low volume, it just means price naturally is going to want to drift higher. But when the sellers step back in, that's when it's going to struggle. High volume usually brings in the sellers. You need big volume in order to drive the market down because there's a natural inflow of buying volume. So you have to meet that buying volume with selling pressure, and then you have to have extra shares to be sold to drive the price down. And so right now, I feel like the big players have just stepped off the sell button. They've taken their finger off. They're letting the markets run higher, and they're going to start unloading shares probably sometime in the near future. As these markets hit some frothy levels, they're going to start trimming their portfolios back because we have been seeing a lot of big, heavy volume selling over the past year, big bouts of it. But, if the market has an upward bias, these big portfolio managers, they're savvy. They're going to just let off on the selling, let the market drift higher, and slowly sell into this over time. So that's what I think is kind of happening here with the small cap space. They're really letting the small caps really float higher here, and eventually we're just going to see some big volume selling, I think.
You've recently cut back your positions and moved largely into cash. So if you still see the upside in this market, why not, position more aggressively for it?
Well, I mean, we are long the S&P 500. We're long the NASDAQ. We're definitely long equities here. We have hit some targets, and we're really just letting this market do its thing. I mean, we're managing our portfolio. I believe risk is higher than normal. I think we could have a very big pullback and correction. The fact that we've got these big macro things at play, we've got big sector rotation, all of this stuff is telling us that it's a volatile market. It carries more risk than normal because it's not a broad market rally. And so we entered the equities market. We've locked in some profits over the past week or so, but we still continue to be long. And I mean, this market could rally another 7-10%. And so we're part of that. But we do have a lot of cash reserve. We've got quite a bit of money on cash because we've sold some of our equity position to lock in some gains. But I'm bullish on the market still.
Yeah. Listen, Chris, you've outlined two very different outcomes for gold, right? Roughly $3,500 on the downside or $8,000 on the upside. What near-term signals would tell you which part the market is choosing here?
Yeah, that's what we really need to wait for. I mean, the daily chart of gold, and this is the same for silver. This is the same for mining stocks. It's the same across the board. When we look at this daily chart of gold here, what we've had is this giant run up We've gone into this huge euphoric kind of capitulation where everyone kind of really piled in, and it was headline news, and it really drew in a lot of emotional traders thinking they were getting left behind if they didn't get in. And now we've had this big correction, this big pause. And so right now we're stuck at this point where this could be a bull flag and it points to 8,000 going higher, or it could be more of a significant topping sign and we see price come all the way down to about $3,500 per ounce. And so the trend for gold right now, based on the time frames that we follow and the trends that we follow, is neutral. We don't hold metals right now. We exited right up here above in the upper level above 5,000, about 113,000 for silver, and now we're just letting it figure itself out. So how do we know what happens? Well, if gold starts to rally up here and starts to build some more bullish price action, it will have gone from a downtrend to an uptrend. It'll have a series of higher lows, it'll have a series of higher highs, and actually it'll build a launch pad to get long again and take advantage of that next move higher. Now on the flip side, right now gold is actually in a downtrend, and we don't really want to be long something that is in a downtrend. We've got all the key moving averages sloping down, prices below it, and it is pointing to lower pricing. And so in a perfect world, we see the equities market, we see the precious metals space sell off, and we do see this downside target, which is the one that you pointed out to here, which is 35 or so hundred, 3,600 to the downside. I think we let the market see if it's going to get down there. I don't want to bet on falling gold. So a lot of people are like, well, if it's going to go down, I want to make money from it. The issue with that is we have mixed signals in the precious metals space. This long-term moving average, this 150-day moving average, is still sloping up, meaning we're still in a rising tide environment. There's still an underlying upward bias. And so if there is that, we don't want to bet on gold falling because it could find support at any time and start to rally. Instead, we just let gold figure out where the bottom is, start to turn a corner and start to come up, and then we can get long, versus trying to bet on falling pricing and then try and bet on the long side. You know, the more you try to actively trade something like that, the odds are you're going to get offside. So the trends with gold and silver, neutral right now. Let's let them find a bottom, and then once they start to turn up, whether it's in 2 weeks from now or a year from now, who knows, we'll get long once it actually shows signs that it's starting a new upward trend.
Okay, so when we come back, I want to chat about where silver is going, but first, a quick look at the Mining Minute. You're watching the Mining.com Minute. I'm Devin Murrigan. America's gold supply is facing a credibility test after a major investigation linked it to criminal mining networks in Colombia. The New York Times found that illegally mined gold, often controlled by armed groups and cartels, is being laundered through middlemen disguised with legal paperwork and fed into the global markets. Now, in some cases, that gold may even have entered the supply chain of the United States Mint, despite rules requiring American mined metals for its coins. Accountability appears blurred, with the Mint pointing to suppliers and suppliers deflecting responsibility further down the chain. Now, Treasury Secretary Scott Bessent has ordered a review promising tighter oversight of how gold is sourced. The investigation underscores a deeper issue in a global market where gold is easily mixed and moved. Tracing its true origin remains one of the industry's toughest challenges. For more, go to mining.com. All right, from the technical traders, Chris Vermeulen joining us today to give us his insights on what's happening on the metal scene. Chris, you've exited silver after that parabolic move above $100, and you've warned it could still correct significantly. Now, it's holding in the mid-70s despite all this volatility. Does that resilience surprise you, or do you see a deeper move lower before any meaningful upside?
Right. So silver has much of the same pattern. It has an upside target if it's already found a low. If it does start to confirm a new uptrend over the next few weeks, then it's probably going to about 165, 175 an ounce. If it corrects lower, we have an equities market has a reset. We have a financial reset. Gold sells off. We can gauge where silver can go based on the recent price action, which is a very significant pullback, as you mentioned. It comes all the way down to about $40 per ounce, which for gold, it's the same window of time. This phase right here is that euphoric phase where everybody just has to run in. They have to get in. They think it's never coming back down. It's just positive news. If you're bearish on it, you get beat up and people talk down about you if you're bearish on something. This is that phase. And so the market has a very interesting way of being efficient. People who are late to the game, meaning they got in during this huge push, the market has a way of unwinding and potentially coming down and getting right back to where it was before the general masses kind of just piled in and drove the price higher. And so that is the downside target. And we have to let it consolidate and pull back to see what it is going to do. But silver has this longer term uptrend in place. So silver and gold could find support at any point and start to rally and give us a new buy signal, or it's going to have a big unwind. Now, nobody wants to hear that. They don't want to hear, oh, it could go up, it could go down. I mean, I read comments all the time. People are like, you got to give us something. Like but this is the reality of it. I don't predict price. I follow price. And right now, based on the chart patterns, they are in a neutral pause, trying to figure out what to do. And if we look at the big picture of silver here, I mean, you go all the way back to the late 70s, early 80s. These parabolic spikes are normal. This is what happens. We just saw huge gains in all of our portfolio holdings, anybody who owns it. And unfortunately, a lot of people have watched massive gains just vaporize. And now everybody's kind of wondering what is going to happen. And so we just need to be aware, a lot of times when you see these giant bubbles, the market will come down and correct very substantially. There's an 80% correction, a 70% correction. We could see something like that again, which, 60, 70, 80, I mean, it brings it back in line with what has happened in the past. And I know a lot of people talk and say, hey, it's manipulation. It's, everybody's getting screwed here and all this stuff. But this is what price does. I mean, we saw this momentum picking up. We knew the euphoric phase was kicking in. We watched everybody emotionally go through it. And now that bubble has burst and it's unwinding just like any bubble does. Doesn't matter if it's silver or the tulip market. It's the same thing. It's human psychology. It's just supply and demand. Yet people always love to blame it on other people and other things. But this is just the way things go. So again, I'm really bullish on precious metals long term. I think silver will be up, $150, $200. I think gold will be 8,000 plus. But I do think there's going to be one hell of a roller coaster ride before there. And I think there's going to be an opportunity to pick up metals, pick up miners after we have a financial reset, which I hope we get sooner than later. And then we can just move on with, the next bull market. But there's a little bit of rough ride, I think, in between them and then and now.
And a key part of your thesis, Chris, is a potential dollar breakout triggering a broader reset, as you speak of, right? With the dollar starting to firm, how close are we to that signal in your view?
I think we're pretty close. The dollar has been trying to build out a bottom for the last year or so. And if it does start to break to the upside, I mean, based on the chart pattern, we're potentially a couple months away from maybe the equities market's putting in a major top, the dollar breaking out and starting to rally as a defensive currency, and probably precious metals selling off. So again, there's going to be a lot of things putting pressure on metals temporarily, which I think is a great thing, because who doesn't want to pick up silver at $40 an ounce at a super cycle low? Because after that, we're probably off to a 10 or 15 year rally. Same with gold. It's going to be for many people, it'll be a once in a lifetime opportunity if you've never experienced one of these and been able to take part of it. So the dollar's set to rally. That will put pressure on metals. The equities markets start to sell off. When there's mass selling and fear, typically precious metals get sold off with it. It's just the baby goes out with the bathwater when there's fear, right? People liquidate everything. And sometimes they don't want to liquidate metals, but they get margin calls. They're on too much margin. A lot of people borrow money and buy equities. And when things go backwards, they're forced to sell even some of the most solid assets that are defensive. And that's why precious metals kind of get sucked down. So there's a lot of interesting price action, I think, unfolding this year.
Listen, Chris, before I let you go, really keen on getting your take on what's happening with copper right now. I mean, you have talk of development happening across the world, and the fact that, this is one metal you simply can't ignore at all. That will provide the impetus for price rises. Where do you stand with copper?
Yeah, copper, I mean, it's not something I follow very closely. I do look at it every month or so, but overall it's a metal. It's holding up very well. There's huge demand. I think the AI space is putting massive pressure, upward pressure, good pressure on copper because of the electricity, the hydro required and all that stuff. But it's just one of those commodities that is in high demand when, if data centers are being built out, it's going to be needed. But just like everything else, it could still be the best asset at any given time. And if the market's correct, they can sell off, right? And I mean, that's kind of like Amazon. It's like they were $110 at one point many, many years ago. The tech bubble came, even though they were poised for massive growth and building things up, they went all the way down to like $5 or $6 a share or something like that, right? So even the best things get sold off. And copper is definitely trading near highs. It has, just like precious metals, it has a lot of bullish things going for it. But just because there's good stories and good potential fundamentally and economic-wise maybe, it doesn't mean price is going to hold up. So again, if the equities put in a top over the next month or two, I would expect copper is going to sell off just like everything else and become an opportunity for somebody picking it up at a fair value or undervalued price.
Yeah. Well, look, it's been a pleasure. Always insightful. Chris Vermeulen from the technicaltraders.com. Thanks very much indeed for your time once again, Chris.
Always a pleasure. Thanks for having me.